Has the Santa Claus rally started? Well, the answer to that question is more than likely it did. Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video. Now, this is not going to be a long week ahead video, not at all, because obviously we're going into the holiday week. But this last week was a crazy week. We had central banks meeting all over the place. We had the CPI that came in weak, but it really shouldn't have. We had a jobs report. We had a lot of data that was actually driving the markets. Metals have gone crazy. The dollar is consolidating, and we're heading into end of year flows. I am going to be talking about all of that, and there are actually a couple events that are happening this next week, not just Christmas and Christmas Eve that many of you will be celebrating, but there are some events that are happening next week, which we'll talk about. But there is one thing I did want to talk about today, which is a Bloomberg article that came out. And, I was talking to all the other people in the Forex Analytics community. I wanted to discuss this because at ForexAnalytix, we have the trader funding program. And so this is a really interesting article. I find it really interesting. It was in Bloomberg from Thursday or Wednesday. I can't remember exactly what day is it, but I want you to read. I'm going to read through just bits and pieces of it, but I want to talk about it really quick. Amateur traders chase elusive profits in simulated markets. Prop trading and what we do at the Trader Funding Program is basically put you in a demo environment where you're trading, and if you pass an assessment, you can actually go on to trade real funds, live accounts. This is a very popular way for traders to get funded, and I think it's really important. It's important for a lot of people that we deal with. However, this article really highlights some of the bad parts of the industry. And I say bad parts because, simply put, a lot of these funding programs, they want you to take an assessment, but they don't mind if you fail. If you fail your assessment, you're going to pay another assessment fee. They make more money. Then you can try and try again. Most assessment programs have very difficult and tricky rules that don't apply even when you go into your live trading accounts once you pass. See, at the Trader Funding Program, we have simple rules. You can't lose more than 6%, and you have to make 10% in an unlimited amount of time, and that's with a drawdown or with a high watermark. That means as you make money, you can't lose more than 6% of your high watermark. It's pretty simple. You have unlimited time. Now, there are a lot of these companies that put time limits. They say you have to pass this target, then that target, and once you do that target, you got to do this target. It's A, it's complicated. B, it's not. It's engineered to be very difficult for you to pass. Like I said, ours not so much. So it really highlights a lot of the industry that really tries to make it very difficult. We have simple rules. We always have had simple rules. Matter of fact, one of the people in here that you'll read, his name's Justin Hertzberg. When we first launched Trader Funding Program, Justin has been. We've done partnerships with him over the years, many years. Matter of fact, a Trader Summit was a situation that we did between our both companies. When we started out, and him and his company at F.P.TX. Did I say that correctly? FPFX, right there. They do a lot of the technology for a lot of these prop firms. Well, I remember when we first started the Trader Funding Program, and everybody had time limits. That means you had to pass within a month or several weeks or whatever the time was. And I said, I'm not going to do this. I want to make sure that we give our traders unlimited amount of time to pass, because you don't want to put that pressure on a trader. He agreed, and we were literally the first company to offer unlimited time for traders to pass, because that is pressure that as a trader don't need. So you have unlimited time to pass. You have to just make 10%. You can't lose more than 6% on a high watermark basis. Very simple. But a lot of these companies, they do make it a little bit more difficult. And that's what this article highlights. So, and a lot of these companies, they're not run by traders. They are just run by somebody who's a business owner, who's trying to, make it several hoops for you to jump through. You should go with a prop firm that is surrounded by traders that supports you. With Trader Funding Program, we actually give you the ForexAnalytix system and our community for a period of time. Because wouldn't it be easier if you're trying to pass an assessment, you're trying to make your 10% and not lose more than 6%, that you had a community to trade with? Absolutely. Check this out. This is the ForexAnalytix community. And this is last night when I said, I'm going to bed after the BOJ had their decision and hours before the press conference. You can see for literally, this is last night. It was Friday in Japan. You can see all the conversations that traders are having literally for the next 2, 3, 4 hours. It goes and goes and goes, and they continue to talk about exactly what the market's doing, how they're trading it. You can go into the trades room. You can see what traders are doing, what people are buying, what people are selling. And you can have conversations with traders like myself and the rest of the staff at ForexAnalytix. Having that type of support when you're trying to pass an assessment to get funded as a trader is imperative to your success. And that's what we do. So if you want to learn a little bit more about the Trader Funding Program, step back, sit back, watch this 2-minute video, and I'll be right back with you to talk about what we're going to be looking at going into this next week. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make, 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news, you have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. Like I said, next week, traders, next week we are going to have a couple events that could potentially move the market. On Tuesday, the 23rd, we're going to have Canadian GDP. We also have U.S. preliminary GDP, durable goods orders, and consumer confidence. So there's a few things that are happening on the 23rd. Then we have, bank holiday, obviously Wednesday and Thursday, which is going to be Christmas Eve and then Christmas itself. And then on Friday, most traders are going to be out on Friday as well. We're going to be broadcasting Monday and Tuesday on our normal F.A.C.E show and also our internal shows, which is the Morning Edge and the daily roundup for those days. So make sure you stick around for those if you are in the Forex Analytics community. We're going to keep you abreast. Why? Because we're at the end of the year and there's a lot of end of year flows that are going through the markets. And I want to cover like some of the benefits of utilizing Forex Analytics. This is a really good example of something that how you can confirm kind of what you're doing in the markets. Take a look at some of these currencies. You'll notice with the Aussie dollar, and if you go to the Elliott wave analysis, Gregor Horvat, who does the Elliott wave analysis, was looking at the 38% retracement as being supportive for the Aussie dollar today. It's 65.80. 65.85 or 65.90. He was looking for that level. Well, if you look at our analysis that we've posted, actually, let me go back over here. You can go over to onto Forex Analytics and look at the basic technical analysis and kind of look at what we've been talking about on the daily chart. We've been also looking at that 38% retracement and that we're in a bull flag pattern. So if you say, okay, well, I see that they're looking at a bull flag pattern, and then Greg is also looking for a turn, that could give you some insight that we might actually see a turn from flag support and that 38% retracement. And it's not just like the Aussie. You could take a look at, let's say, the Kiwi dollar. The Kiwi dollar, same type of setup, looking for a 38% retracement, which is at 57.34. And then you confirm that with some of the analysis that you're reading here on Forex Analytics and saying on the basic technical analysis and saying, oh, they're looking for the 38% retracement at 57.37, and where you end up getting channel support right there 8 hours ago, and we end up bouncing, like you see in the Kiwi dollar, you end up bouncing from the 40 level or 37, or we went as low as 36. We had a what is that? 25 pip bounce thus far. So if you want to know what we're looking at all the times and what we're, how we're analyzing the markets, that's the great thing about utilizing Forex Analytics, is knowing what multiple types of analysis and multiple analysts are looking at the exact same time. But those are just some of the basic features of Forex Analytics and why we love having you part of this community, because you could be in the chat room talking to us about these different developments that you're seeing. You can also be reading this and having all this analysis in the palm of your hand on a mobile device. Now, I'm not the only person that wanted to do this video this week. Nick from Trading Analytix and also Pelican, he wanted to give you a holiday message as well. So I'm going to pass it over to Nick, and then when we come back, I'm going to review the trades from last week, but I'm also going to take a look at a couple markets that I think should be in your view next week. I don't want to give you any trade ideas because next week is a holiday week. It's a big holiday week, but I'd like to still bring some things to your attention. So make sure you stick around for Nick, and after that, make sure you stick around for our trade setup reviews.
Everybody, my name is Nick Groves with Trading Analytix and Pelican. Blake, thank you as always for passing on over. Happy holidays. I'm sure we'll probably both be keeping this a little bit of a quick one because of the holiday next week. And let's go ahead and talk about good old Santa Claus. So we're coming into that time where typically the last, 5 trading days into early January is when you'll tend to see that Santa Claus rally that trends on Twitter, X I should say. And I want to point out, the last 2 years haven't been too great for the Santa Claus rally. Now, normally it's done well. 2021 had a really good one, but it hasn't recently been what's considered a slam dunk seasonal play. So we have to be a little bit careful with this. I can show you here on the charts, going back to December of last year, we had that big fall, and then it rallied back. But as it came into, it looks like my arrow is frozen. Hold on, let me give a refresh real quick. Sorry about that. As you can see, we got into right around Christmas and it started to decline. So it's not always a lock, Similar situation in 2023. There was a bounce, right? This isn't really a bounce, this is a continuation. But as we got into Christmas, it kind of went flatlined down. Now, right now, I feel optimistic about the idea of a Santa Claus rally. I actually would say that we might break the streak this year, and the reason being is, next week's going to be all about flows, and when I'm looking at this, I just see stop losses. I see stop losses here. I see, everyone's gone. How do we make some money on triggering all of these stops, right? So that comes in at about 69.21. And I would not be surprised to wake up and see the futures taking this out because it's an easy money grab, probably. Might not cost as much to rally this market up and trigger those stops. Now, will it continue on and really rip? I don't know, but what I would assume is that it makes some form of a break above here, and then you could see it back down, and then you're kind of in wishy-wash land at the new year. So be cognizant of that. We did have some great data this week. CPI really ignited a fire, kind of saved the day when things were looking ugly again. One of the contracts that did exceptionally well was IWM. And I want to point out that the Russell is in a bull flag pattern right now, and it perfectly tagged that 38.2 continuation fib. I was thinking back, Blake, Ryan, Cayman, Stelios, and I all wrote an article at the beginning of going into 2025 saying what's going to do well this year. And I was pretty hot on IWM, and I'm tooting my own horn here. But I do still feel good about this. And the reason being is these small cap stocks tend to do well in a rate cut environment. So when that CPI number came out and the Fed the other week sounded hesitant about rate cuts in 2026, well, you see jobs not all that great. You see inflation coming down. That kind of gives the green light for maybe this bull flag to play out. Let's talk a little bit about some big tech stocks. Taking a quick look at I think I want to look at Apple. Apple did break this ascending channel here, and we highlighted this last week. It's broken down on good volume, and I imagine that it could continue to come down to this 255 to 250 level for Apple. I'd like to see it retest that former all-time high that it has now overthrown. And also NVIDIA. This one has been a fun one. I've been wanting to see this break, but it continues to hold its own ground. This level here at 170 is a giant level in NVIDIA. I'm going to go ahead and alert it up now. I would have this on your charts if you're equity trading or even FX. This stock accounts for a lot. I want to say it's almost 7% of the S&P, but don't quote me on that, but I'm pretty sure it is. We need to be watching this. And, this head and shoulders formation, as I was looking at it this morning, I'm like, I think I saw this before. And let me go back really quick. It kind of looked like it here. It does this where it'll look like a head and shoulders formation, right? And it'll make you feel like it's about to break down, and then it goes on. So maybe we'll see some resurgence and then a pullback, right? But it's looking awfully similar. Just want to give everyone a heads up on that. Now, if it's going to continue to bounce and rally, some resistance levels that I'd be looking at is probably this 185 level, and then above there, 195, the 618. Quick little look at crypto. Ethereum did break that bear flag. It's now triggered. This resistance here at 29.82 is significant. If it gets back above there, well, this flag's essentially toast. Again, this already had a very large decline, 45%. It's tough to assume if this bear flag were to play out, you're talking about a very large decline in Ethereum, over 70%. So this is a stretch, but it's a formation to watch. We'll have to see how things go into next year with crypto. With that, I hope you all have a great holiday. Merry Christmas, and I will see you all very soon. All right, cheers.
Thanks, Nick. Nick put together that video. I knew he wanted to put together a very short video, probably covered a couple of markets. I don't get to see his video until after we've gone through editing, but he always does a great job. And Merry Christmas. Happy holidays to you, Nick. Thanks for all of your efforts. And that's from me and from all of our viewers too. All right, let's talk about last week's trade setups. We had 3 of them last week. And then from there, we're going to talk about a few things that I think you should be looking at going into this next week, especially with end of year flows that are happening. So last week, trade setup number 1, we talked about buying Bitcoin near the 86 to 87,000 level, counter trend back into the flag. Well, if you look, and let's go over to our week ahead charts, you'll notice that the flag pattern probed the bottom of that flag, right? It probed that bottom of that flag, and we were looking for a bounce. And nothing's really changed. We are still, here, let's go to the 4-hour chart. We're still really looking for a bounce, but what I've done is I've actually adjusted that flag pattern a little bit to look more like this. And we've kind of been doing that all week. But we basically just went to 85,000 and we bounced, and we're trying to bounce. And I still think this flag pattern is still valid. Now, if you would have bought it at 86 or 87,000, we're above 87,000. So, is it still in play? Sure. And did you make money? Yeah. I mean, if you bought that and you're trading it, yeah, that worked out. Now, the thing is the bounces are very shallow, and I want to point out that I still think that Bitcoin, as I told you last week, I still think it's in a bear flag pattern, and I think it still looks very vulnerable. But this, for the sake of our trade setups from last week, trade setup number 1, yeah, it worked. All right, trade setup number 2, long New Zealand dollar for a move to 59 cents. Now, I didn't even talk where. We're looking for a move to eventually get above 59 cents, and I'm still long the Kiwi. But is it down on the week from Friday? The answer to that question is it is. But if you are looking at it, I think it looks like a bear or a bull flag pattern. And as you can see from today, we did hit the 38% retracement, and it looks like to me that we're going to eventually be moving higher, especially if we can get back above 58 cents. So counter trend move. I'm still in this trade, but from last Friday to today, it is down. So I'm going to say one trade setup worked. The other one didn't work. This one, it didn't. I still am looking at it bullishly, but for the sake of trade setups, yeah, one worked, one didn't. All right, third one. What is the third one? Buy any dip in gold to 42.70. Well, that one worked out famously. Matter of fact, I think we made 2 dips to 42.70 this week. We did exactly that. Now that I'm thinking about it, what you'll see is we were here yesterday or on Friday of last week. We rallied, and then we dipped again earlier this week, and we rallied. So gave you a couple of different times to buy gold at that level. So do we count it as 2? Nah. Okay, it worked well. So you got 2 trades that worked. One of them that's still in process, but for the sake of what we're doing, it didn't work. Not a bad week for the trade setups that we talked about last week. All right, now the question is, since I'm not going to give you any trade setups this week, what am I going to talk about this week? What am I going to talk about for the week coming up? Well, I want to talk a little bit about equities really quick because, we've been having this discussion over the last couple of days in the ForexAnalytix community, and one of our traders said it best. Who's in our chat room, Dale? He said, look, and I've been talking about YOLO FOMO. You only live once, and now I have the fear of missing out. So you got a little bit of YOLO and FOMO acting at the same time as we're heading into the end of the year. When you got the data, the CPI data, the jobs data, all the data that we got this week, it really gave the market the green light for the next couple of weeks to really think that the Fed's probably going to stay relatively dovish. And that gave us the green light to just really start buying stocks into the end of the year. The problem with this year has been this, and if you've heard my analysis this week already on this, I'm sorry to do this to you again, but at the beginning of the year, the stock market was knocked off kilter by the Liberation Day, and when you have a market that's sold off and then it reversed, very few fund managers actively got back into the market until we started breaking back out to the upside. So The problem is even though the S&P is up 15% on the year, there's probably a lot of asset managers and hedge fund managers that are now trailing the S&P, the broad markets. And in fear of having redemptions going into the beginning of the next year, a lot of traders are going to try to make their entire year in a week. What that means is basically you have everybody that's trying to, get long for the Santa Claus rally, make as much money as possible, do some window dressing at the end of the year. Do I think it's a crowded trade? Sure. Do I think that the stock market's going to succumb to some selling pressure soon? I do. Is it going to be over the next week and a half? Well, for me, I think we're going to be in a situation where the market is, or investors are continuing to chase markets. But at least from here, we can actually identify where the market turns bearish. And in my opinion, it's back below this black trend line. If you end up dropping below this level right here, my assumption is the market will go down if we break that level. But unless that happens, we're probably going to continue higher into year end as investors chase this market with FOMO. Now, one of the things that I will be looking at is I will be looking at Bitcoin, making sure that Bitcoin stays above that 85,000. As long as we stay above that 85,000, we should continue to recover back to that 98,000 or so before we turn lower. But the flip side is if we break down, you guys can see what the ramifications are of a breakdown in Bitcoin. It would be quite bearish. So once again, as long as Bitcoin continues to hold up above 85,000, I wouldn't be worried about this market too much. Now, the other thing I want to bring to your attention before I let you go is what's happening in the dollar. Now, if you read some of the bank research, and by the way, if you don't know where to get the bank research that I'm talking about, well, you can go into our chat room, you can go into the news and research room, and you can download some of the articles that have been uploaded. One of the banks that I'm not going to reference right now, but one of the banks had reported that they generally speaking are seeing more dollar selling into year end. Well, that may or may not be the case. Banks have been very they haven't done a great job with identifying end of month and end of year flows. However, even K-Man, who's one of our colleagues, he's like, yeah, if you just do some preliminary models based on what funds have done this year and, what allocations are where, there should be, the models would suggest that there's going to be a little bit of dollar selling. Well, how about if that dollar selling has already been done already? Then what do we get? Well, if you look at the dollar has been down and out literally the whole year. We dropped quite aggressively this year from the beginning of the year, and we've stayed sideways since. If the dollar, which is, as you guys can see, is still on a double top, which should target at least 97.80 or so to the downside, that's where it should target, to complete this double top and bear flag pattern. We should get down to here eventually. Well, we're currently here. So if we're there and we're getting there, there's probably some downside in the dollar index as long as the flows continue to dominate for selling. Now, if they reverse, what I would be careful with is I'd be careful with this previous support or today's highs. If today's highs are broken, that means that the dollar index is probably heading higher into year end. But if stocks remain with upside pressure, Bitcoin remains with upside pressure, there's a chance that the dollar index could remain weak going into year end. Now, the reason why I mention this is because when you have less participants, like our chat room right now, for example, probably has about 40% of all the traders that are normally in the chat room, because the holidays, people tend to pack up, they're done. Same thing with banks and institutions. They tend to have flows that they have to do, but all the trading is pretty much done. So if flows are coming through the market, there's less likelihood for flows to reverse. So as a result, you can have moves that could really carry in one direction or another. So what I'm going to try to say here is be really careful with year-end flows over the next 2 weeks, because if the dollar or the stock market or any other market really starts to move in one direction, the moves can get rather violent quickly because no one wants to get in the way. That means no one wants to be on the other side. So with that being said, you guys make sure you take advantage of the trader funding program. Take advantage of having the simple rules. Take advantage of being involved in our community while you are trying to pass an assessment. Or if you want to get instantly funded, you could do that as well. And worst case scenario, join the ForexAnalytix community, be part of a community, be able to talk to myself and my colleagues and other analysts and other really great traders all day long, every day. Although I'm there probably 14 hours a day, there are traders around 24 hours a day. So jump in our community. It's only $1 for 10 days. With that being said, I hope you have a Merry Christmas. I hope you have a happy holiday season if you don't celebrate Christmas. I just hope you have a great week. And I'll be back next weekend for a shortened end of year, what I'm looking for going into 2026 video. So thank you very much for listening in. If you like these videos, you like them for helping you prepare for your trading week, give me a thumbs up, give our team a thumbs up, and jump down in the comments below if there's anything that you want to see. And then also, subscribe to our channel. It's free to subscribe so you don't miss any of these videos. Merry Christmas, happy holidays. I'll see you next week. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.